Good evening, ladies and gentlemen. This is Clueless8, and this is the end of the day report for July 21st, 2015. Let me get straight to the markets and to the Clueless8 service. We are hitting major home runs. Credit has to be given where credit is due. The type of trades that I'm presenting to my members, both on the long and short side, primarily on the long side, and of course on the short side too in the form of the index puts, are spectacular. A member the other night reminded me that the markets are barely up 1 to 2%, if not a little bit more, on the major indices, on the Dow Jones, S&P 500, double digits on the Nasdaq, of course, 10%. That was as of this weekend. Yet we are hitting 100, 200% in some cases, like Google and Netflix, tonight, ISRG, and a slew of others that are hitting 1,000% plus, 6, 7, 800%. The question you have to ask yourself as a member and as somebody committed to making money in this particular line of business, whether it be as a sideshow, as a hobby, or as a full-time trader, is why you should ask yourself, and ask yourself seriously, as to why you're doing this. Are you doing this as a spectator just to sit on the sidelines and watch absolutely fantastic trades go through and not have the courage and the discipline to be involved in it, just to say, hey, I'm going to catch the next one? Or are you doing this to be a serious professional trader who engages with the market, not shy away from it, but engages with the market, engage in battle? Because that's really what it is. It's a peak performance sport. And to me, it's not a sport. To me, this is my living. This is what I pay my bills with. This is why I live a very comfortable living. Thank God and thank the USA for everything that every day that it gives us opportunity to trade this to one of the best financial markets in the world here. So the question you have to ask yourself is why, and I know a lot of you are, thinking the same thing, why you're just missing out one after another. I can't answer that question for you, but I do know the answer. The answer is that you're scared. You don't believe in yourself. You're seeing these repeatedly. You're starting to understand the methodology behind my thinking, and especially the ones who have taken the advanced coaching sessions. You're listening to this vidcast, that itself is a first, yet you're not acting. Well, it's time to act. Take a small position. Because whether you win or lose, at least you're involved. You know how the dynamics work, so you can do it better next time. But if you're not sitting there thinking you're going to paper trade the next lot, well, I have news for you. You'll never be a successful a successful trader. I've lost plenty, I know. But obviously the winnings have been far ahead of the losings. Of the losers. Of the losses, I should say. So the point is that I don't want to get into a behavioral modification program, sermon here, but you really have to wake up, smell the coffee, and attack this market at face value. There's going to be long and shorts all over the place. I was short Apple today. It's down 10 points. The estimated return on those calls are about 300%. Estimated return on the calls on the ISRG are about 400% overnight. The stock is up more than 70 points. 70 points. At one point, it was up more than 80 points. Google was up 100 points. Like the old saying goes, you can take a horse to the water hole, but you can't make it drink. So if you're going to be that horse that's taken to the water hole and you don't drink, the water that you need, then no one can do anything for you. So it's time to wake up, guys. This market is always going to be volatile. What you're seeing in the background is an exact forecast, an exact actionable forecast of what I had explained just the other day. I'm going to go through that in a minute. But don't listen to me. Listen to yourself. Listen to your cries in your head because you kept, and the regret because you kept and you keep on missing trades. If that doesn't piss you off and make you angry about yourself, then nobody can help you. You have to get angry at yourself in order to change, move forward, act, take the trades, long or short, minimal amounts. Small gets big. I said that months ago. You buy a $8 call and you sell it at 50. When was the last time you did that? Some of our members did that recently. A few of them. I'm proud of them. So the few, the proud, the brave. That's what traders are. So my point is, join that crowd. Don't sit around saying next time. Please don't do that because eventually it becomes such an ingrained trait that you'll never get over it. So I'm not a behavioral therapist sitting, but I'm telling you straight out. Don't make it an ingrained habit to the point where you're just constantly wearing yourself out. And then you quit. And how does that feel? Quitting such a dynamic profession. You don't have to be a full-time thing, but even on the side, okay? It's the worst feeling ever. Knowing very well that it can be done, you're seeing it getting done. Enough said. All right. All right, so here we are. We had a very powerful move off the lows. This is the E-minis, of course. 2035 at 6 or 7 points to it to arrive at the S&P. So this was around 2040, 2043, 2044. And we had this massive move up. What do rising wedges do? This is a rising wedge. It corrects. Where does it correct? It generally comes and does what we call a reversion to a mean reversion, which means that it'll come and test the 34 and the 50. It crossed through the 34, kind of hustled around there, but then gave in, and now it's going to hit the 50. As long as the 34 and the 50-day moving averages are pointing up with the gaping spread right here, look at the 34, look at the 50-day moving average. The markets are fine. You start to see a trend change, and let me get my drawing tool here. You start to see a trend change when you see something like, let me get the big, okay. You start to see a trend change if you see this go all the way below the 50, come down here, and then go below 2080 and or even 2090. That's a trend change. That means this market is going to come and test these lows again. So be prepared for it. I've always said that I teach the market indices, and I explain that very clearly because this is the house that you trade in. If you don't know what the structures of the houses, which is the S&P 500, the Russell 2000, or the NASDAQ 100, or the biotech index, or whatever, then whatever your trades are, there's a high probability you're not going to know how to trade it because you don't know what the markets are doing in the background. So the bottom line is that at this point, testing the 50 and 50-day moving average right here is standard procedure. I showed that. I showed that couple of 2 days ago. I was short the S&P 500. I did cover it today, maybe a little bit earlier, but that's okay. But I still got more than 60% on my money. Yeah, I could have gotten a double, but 60% is good enough on a strong market like this. So here we are. So worst case scenario we're looking at is around 2100 on the ES. That's around 2107 or so on the S&P 500. Now let's see what's happening on the internals because that's what really tells you. That's the early warning sign as to what might happen. The little, like they say, they never wave a red light in the cautionary phase, they don't raise a green flag to go ahead. So this is how you read it. I've done it for so long, it's become second nature. My advanced session coaching members know very well what I'm talking about. So at this point, look what's going on here. You got a deep oversold condition. Let me get this right here. Daily 4 hour. Okay, there we go. So at this point, we have a deep oversold condition. Like here was a triple bottom that literally no one outside bought. A lot of our members did. And then we get a massive rising wedge. Yeah, right there. I mean, I drew a channel here. And guess what? We're at the bottom of the channel here. And a little slippage too is the 50-day moving average. Rising 50-day moving average, I should say, this red line. So here we are, deeply oversold again. Now, what happens when you get that deeply oversold? Well, why don't you look at it yourself? You get deeply oversold like that, you get a bounce. You get deeply oversold like this, you get a big bounce. So here we are, deeply oversold again. Yeah, we might slip and slide a little bit, but as long as the stochastics are turning, you want to stay with the trade. You stay long. You buy down a little bit, cost average down, and bang. We get these massive moves like this, like we saw here. And that's where you get those 200-300% type of returns in 48 hours, if not 24 hours. Look at this. Kept on going, right? I kept on warning once it got to the top of this that, guys, we're very overbought here. We are in very overbought territory. It will correct. Well, guess what it did today? It corrected. So those calls which you could have bought at $8, $7, $6 went to $12.50. 100% return on your money. You got 60, 70%. That's fine. So I had a tough time convincing many traders to short. I have a tough time convincing traders to buy at these lows based on all my signals. And this is just the basic ones. There's a lot of other things I look at. So what gives? What gives is volatility. Volatility, the big vol. Okay, volatility, not volume, but volatility. Volatility. Okay. And the algo HFT, high frequency trading program, the algorithmic HFT trading programs are the ones which screw with your heads. My job is to cut out the noise and try to be as robotic as possible to be with the game and help people make a lot of money. So at this point, let me get straight to the point here. We are deeply oversold. Futures are down thanks to Apple, which I'm short, and some of you guys are too. And here we are creating a beautiful consolidation channel right there, right there. This is a consolidation channel right there, okay? And let me get to the daily. Let me get to the 4 hour so we can show you this. So this is a nice consolidation channel right there. And we could slip it a little bit more, 2102 down here. As long as we don't break through this channel and fall, we're okay. Because you know what's going to happen? And mark my words, I haven't been wrong in a while on these type of pattern recognition and pattern symmetry moves. It's going to probably come down here. Then we're going to have a nice move up. There's going to be all kinds of background noise that's going to push this up. But you know what? That's most probably what's going to happen. Because at this point, unless we stick to this bottom here, this stochastics are going to turn and you're going to have a reflex move up. I'm not saying we're going to make a new high. I'm simply saying that we'll have a reflex bounce just the way I said it repeatedly down here. End of story. I'm going to cover a few stocks. Well, very simply, I want everyone to look at every single chart that I posted on my Twitter feed. They're very extensive. I'm not going to waste any more time tonight. I might do a pre-market AM report depending on the time in the morning. And at this point, the only thing, we have some huge winners. We have ISRG up 70 points. God knows what those calls are going to open. And I will tell you that I showed this chart fantastically well on the, and I want everyone to go see it on the Twitter real-time feed. I couldn't be more clear about where it was going to go. So it's well beyond 551. It's around 560. It did go to 580. Um, hit the highs, pull back a little bit.